Good morning, everybody. Here we go again. We go again. We go again. Um, Open up the dashboard here. Do 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 do. Good morning. Good morning. Good morning. Good morning. We're doing that thing with the stuff and the things and the stuff, right? That's what it's all about. Good morning. Okay. What are we looking at today? We are looking at GME's got their stuff, their earnings this week. That'll be interesting. Zomedica guys still sitting above that $2 mark. Ran to 215 on Friday. It's 205, 206 right now. We are heading into the last week of March here. So March 31st was the deadline. That's next week. So we'll see what that does. Stimmy checks are out there for sure, guys. So we'll see what's going on there. SNDL, again, waiting on legalization with that, so I'm not jumping the gun anywhere on that. The only other holding that I've got of note is the is the SHG play that I'm in. SHG guys is going to be a really great play for me into the end of the year. That's something I'm just going to keep leveraging into until I see it head into the real exchanges. I think that it just has huge potential. I'm very bullish on SHG, especially with Biden care in the States. I'm a big fan of the play. I think I'm just going to be there more and more and more. Slowly building it up, slowly growing in that sector. Healthcare is going to be big. It's really going to be big into the end of the year. SPACs, let's refresh this and see where we're at with SPAC tracks. Again, guys, what I'm looking for here are merger completed. Merger completed. I'm not looking for anything else. The waiting game on SPACs is a bit of a pain in the ass, so definitely just going to be playing into SPACs. Cannot reach. I was going to say, I'm sure you can reach that. No, that's unfortunate. SPAC Tracks is going to a paid model. Of course it is. Okay. SPAC calendar. Trying to find a replacement tool. SPAC calendar, SPAC insider. Have to purchase a subscription. SPAC track. So SPACtrack.net looks like it's where we're at. Happy Monday. We are back at it. There was a merger on, what was the ticker? CIIC. FTOC is a different play for me. I'm bullish on what they're acquiring. Payoneer is what I want a piece of. I'm not playing FTOC like a SPAC. FTOC for me is Payoneer, and that's something that I am very, very bullish on. Fintech playables with an e-commerce push is just going to be so strong. You're seeing the valuations on Square and Stripe and PayPal just skyrocket. I think Payoneer is going to do something very similar. Okay, so CIIC. This is expected to close this quarter. That's not the timeline that I want. Mm, no, I don't want a recent IPO. I want. There was one from last week. Is it OUST maybe? Hmm. OUST. Okay, so it might have been this. Yeah, so on the 10th, it commenced its trading. So let's go 5 days on the chart. No, gotta go back more than that. Wait, was it the 10th? Uh, Good morning. Okay, so it looks like this stock started trading on the Wednesday. My idea with SPACs is typically it's a merge that happens Wednesday, Thursday, watch it decline into the Friday, and now over the weekend people will have access to these shares. So with this thing down around $9, 975, 980, 950, 950. So I would have grabbed it on the Friday, probably at the gate here, somewhere around that nine. I can't get the. I guess I can go to 5 days on the 15 minute. Yeah. So this initial dip here in the morning, this is where you would buy off that strategy, and then hold it over the weekend. So um, yeah, what you're looking at here is like, okay, wait for this to taper off on the Friday, buy in. It would be somewhere around here. I don't know that you'd get the bottom, but somewhere around this level, sub 950. But we'll call it 950. And then pre-market today, where's Oost? 996, 1022. So, I mean, you would have done all right. That's a decent gain. So, again, it seems to be playing out that you run that on the Friday, wait for that initial decline in the pre market, grab your shares, and then make it count. Now, I don't like this new calendar that I'm looking at here. I definitely want, I mean, because there's nothing here talking about. There's nothing here talking about dates of mergers, right? Um, completed SPACs, maybe? If I go into completed SPACs, it'll open up what I want. Yeah, that's not one that I'm huge on. Okay, so there are some other ones here, guys, that there are some SPACs here that have closed. PCT. So PCT is another one that closed on the 17th. So let's take a look at PCT. This only has 1 day of trading history on it. But again, it would have been you get in on that initial dip here. So it opened here, dipped down, grab it, probably somewhere around that. I mean, you're not going to get it at the bottom. You're not always going to time it down here. But let's say you got in at 30. What's this? This midpoint here. 3150. Right? 3150. And then today, PCT in the pre-market, where it should be 32, 3390. So yeah, there's definitely gains on this strategy. It's just you have to have that in the calendar. So I guess this isn't terrible as a calendar because what I can do here is use this calendar. SPACTRACS, guys, I did have to drop it as a tool. They're putting up a paywall. But with this one, it does look like there's opportunity here. It is showing SPACs that are completed. So longevity has picked up 4D Pharma. One of the rules of the strat is you don't play biopharma SPAC, so that one's not there. But yeah, I mean, this doesn't look like a terrible way to do it. What is Newbie Holding Corp? NVVE. Let's open up marbles here, guys. I'll get that up and rolling. We'll have that to take a look at. NVVE is not showing up here. NBAC. So this is an electric grid company. So this is them looking to put in chargers and electrical grid plays, um, which I don't hate, but I'm also not a huge fan of. But it doesn't really matter what the product is because that's not what I'm trading. But now it doesn't
The,
appear like they are trading under that new ticker right now, though.
see that thing I pinged you
Yeah,
about?
that's gross. Yeah, that's just gross. I want I want nothing to do with that.
By the way,
So NBAC is still here, so it hasn't done its name change yet. Yeah, NVBE is not yet a ticker, so
I showed it to Rita, and she's like, so they made a lot of money, but what they did was it's because they bought a lot of other companies during COVID when they were like, she's like, imagine a boat there, right? And people are sinking. They're like, come onto my boat. I can save you guys because your boat's sinking because of COVID, and that's basically what they did.
what's the new SNDL filing? I haven't opened it up yet this morning. I did hear chatter about it, but I will open it up and take a look at it. It's probably something to do with an offering or a stock buyback, one of the two. But I will take a look as soon as we get the marbles done here, guys. So go on, get in, play. I'm gonna get rid of some of these beer cans and bottles and whatnot, and I will be back uh, shortly. And then I'll run it. And then we'll get into the day, and we'll hopefully make some dollars. All right. FJ Loma, thanks for the follow, man. Much appreciated. Let me know how you found the stream, what it is you trade. Let's get this going. We are off. We are running 10 seconds. If you're not in, get in, get in, get in. Watch and learn, boys. Watch and learn. Thanks for the follow, man. Let me know how you found the stream, what it is you trade. Never want you guys to just be lurkers in the stream. Definitely want you guys to be able to engage. I want to know what kind of stocks that I can look at to help you guys out. So away we go. Down the pipe, out the tube. Doesn't look like anybody can get cucked here. There's a lot of speed boosts, so we'll see who catches which speed boosts. Oh, there's portals and stuff in this one. Who's coming out first? T-Rent? T-Rent out the truck first. Where's Martini lately? Figuring stuff out for sure. She's just figuring stuff out. GXO, Krieger, Sean, who wants it? Hitting every boost. Uh-oh. Who's it gonna be? GXO, GXO. The train. The train gets it. There it is. Fancy train. Choo choo. Look at him. Look at him. Look at this little train. All right. You win, G. You win. Give me the ticker. Mara it is. Mara out the gate. Yeah, but guys, the SPAC play does look accurate Friday at the market. Get out when you see the decline happening as volume diminishes to the downside. Take an entry, and then you hold over the weekend. And I know a lot of people that it's like, I know hold over the weekend play. I'm not a huge fan of that. Then don't play it. Actually, don't play anything that you see on the stream because I am a full blown speculator. I am not an investment professional. I'm not a financial professional. I'm not your advisor in any way, shape, or form. So if you're looking for financial advice, go to a bank, go to an investment firm, and go ask them for financial advice because they are accredited and they can give that to you. That also goes for everybody that you hear a speculative investor. Yeah, no, guys, what I do is extremely dangerous. There are great returns on it for me, but there's a lot of people that play the way that I do and have great losses. With great losses comes great responsibility. So just be aware of that. Nothing that you hear here on mic, in chat, or hear out of my mouth is financial advice. It's just the way that I play my own portfolio, okay? Rebels is not up to date on his certifications to be a financial advisor, so that's why I've stopped advising people to go to Rebels immediately for financial advice. They go if you're trying to understand the industry for sure. Rebels is a wicked smart guy. I'm not saying he's not. Dude is wicked smart. Puts me to shame. Way smarter than I will ever be. Just Rebels is really good. I'm just saying, like, if you are seeking somebody that has their accreditation up to date, go to somebody who has their credentials up to date. Please don't ever shadow trade anybody that you see on the internet, whether it's Twitch, YouTube, whatever. Okay, so word of a new filing for SNDL. So for those of you that are unfamiliar with Edgar, get to know Edgar. He's your friend. He's one of your buddies out there that you definitely want to be aware of. So go here, go. Warrior is a TA trader, so I'm not really going to go near that. You guys know how I feel about TA. There is no edge in TA. Everybody's just guessing at chart patterns. So not a big deal for me. Okay, so prospectus, equity distribution agreement with Canaccord, ATB. $800, is that $800 million? Hold on. Well, it's not the wrong form. This is a prospectus, so this is different. This is not shares issued. Okay, that's a little better. I can read that now. From the morning call, sweet. Sweet. For the morning call, yeah, that's awesome. Rebel doesn't day trade, does he? No, he doesn't day trade. No. Rebel plays a much. He's an LTH trader. He does some TA. He does some macro stuff. Different style trader. I don't know that we'll find two traders that are exactly the same on any platform. But okay, so this is entered into an equity distribution agreement dated March 22nd. Canaccord, ATB. So all this is saying is that they've come to an agreement that the up to $800 million of shares that they can list, these are the two firms that they're going to use to sell them, ATB and Canaccord. That's all this is saying. Common shares have experienced significant volatility since the time of our listing on the Nasdaq and experienced extreme volatility. Sorry, the bell has rung here. So I'm going to pop up the chart. You guys can watch, and I'll keep reading the prospectus here. Man, Mara at 42. That's crazy. Crazy, crazy, crazy. Okay, I'll keep reading this though. On March 17th, the closing sale of our common shares at Nasdaq was reported as US 154. On February 12th, the closing price was 208. Between March 17th, 2020 and 2021, the closing sale price of the common share was from 14 cents to 295. Our share price varied from an intraday low of 92.925 a share to an intraday high of 230 per share. other than as described in an annual report on Form 20F. Blah, blah, blah. Sales of our common shares of any under this prospectus supplement and company-based prospectus may be made by any method permitted by law. Yeah, so this is just... We are an emerging growth company and a foreign private issuer under applicable SEC rules and will be subject to reduced public company reporting requirements for this prospectus supplement. So because of what they are, they don't have to give the same information that you would get from a U.S. company. Mara giving a little back there at the gate. Let's check. Let's go here. Portfolio is down another 3% here. Canadian one is up 1.6, but still down overall, unrealized. So not a big deal. It's looking like a bit of a slow day. Just waiting into the end of the month here. All right, let's get back here. So they can sell up to 800 million. And Google is a value stock. I think there's spin-offs because I think there's going to be at least two more Google spin-offs. Those will be growth stocks. I think they will be forced to spin off their driving section from Google. It's too big. Yeah, chainmail. I would say the same thing. I think that this is an anticipation of legalization coming through. Also, I think that they have news in the pipeline of acquisitions and mergers. So I think what they're doing is prepping to cash in on those, which I'm fine with. Because the more money that they make, the more that they can just continue to buy things up. I think they're trying to steamroll into being a merger and acquisition for the sector. So what they're looking to do with SNDL here is a lot of people are just going to read this as an offering. That's not what this is. This is the ability to sell up to $800 million worth of shares. The reality is as legalization comes in and they start to announce their mergers, acquisitions, and partnerships, what you're going to see is SNDL is slowly going to start to grow, right? And as they announce a merger and an acquisition, you're going to see the stock price go up. And then they don't have to do a new offering. They can use these existing offerings that they have, these prospectus on file, and they're able to just sell the stocks already. Using these sellers to major buyers. This is not going to be the guys like you and me. This is going to be the major funds that want to buy based off of that. Now, imagine if they can continue to just rake in more and more and more and more. What they did for $1 billion a few weeks ago was say that they could release up to $1 billion, but that's not what they did. They're able to doesn't mean that they did. Those are two very different things. So just be aware of that. They can do that. And kind of the cool thing with this is, so let's say they announce a merger, right? Merger or acquisition of Hexo. Great. They become this bigger thing. Now that you got this bigger beast. People go, oh, we like that. We like that they're bigger. So now the price is going to go up to $3, let's say, okay? SNDL goes to 3. They sell more. Well, now they got more cash in hand. And when they got more cash in hand, what do? They go and go, okay, I'm going to go buy up another company. Bam, we're going to buy this one up. Okay. Well, and that headline hits. Okay, well, this one's gone up. Great. Stock price goes up because they acquired another company and they're bigger now. Oh, great. Well, we're going to sell another one. That's it. Over and over and over and over and over again. Warrior trading is exclusively TA. It's just not something that I do. It's not my bag, baby. There are definitely TA traders out there. Guys, book of the week, by the way, on the reading list. I'm still I was wrestling this weekend with whether or not I was going to add the book to the list. I am going to add it to the list because it is a book that does provide value for people that are not looking to be active speculators, are not looking to be active investors. They are looking to buy and hold for an extremely long time. So I know he does. I know he does because uh, so the reason why the Wolf of Weed Street really hates SNDL is this, guys. He is very firm on U.S. pot companies. U.S. pot companies. Um, his issue with SNDL is it's getting all of this hype, but it's a Canadian pot company. Well, the bigger problem for him will become, well, what happens when they start to acquire U.S. companies? They'll be a Canadian company still, but their holdings are going to be U.S. based. And they're already going to be set up with all the financials and everything that they need to operate. They're going to have a solid supply chain. They're going to have all kinds of cash behind them. So, I mean, it makes it. I understand where his position is. However, I disagree, and that's my prerogative. All right, guys. Book of the week was The Intelligent Investor, which is um, a classic. El Inversor Intelligente. This one. Yeah, J Pow talking doesn't change anything for me unless he's going to say that there's a rate hike, which he's not. So J Powell's speech for the next year is stay the course, stay the course, stay the course. Hey, Mr. Powell, what do you think about the current climate? Do you think that you guys are going to continue quantitative spending into forever? Yeah, okay, stay the course. Um, Balorizi, thanks for the follow, man. Let me know how you found the stream, what it is you trade. Well, this is not a dilution event because they're not actually creating new shares. These shares were already out there. That's what they did a few weeks ago. Was they created the opportunity to sell these shares. This is just an agreement between Canaccord and ATB that they will be the ones selling these shares in bulk to people. That's all that prospectus means. It's not an issuance of new shares. It's not a dilution event. The dilution event already occurred. But those shares don't exist. It gives them the ability. So what they filed 2 weeks ago gave them the ability to create up to 1 billion shares. It's not that they have, it's that they have the ability to do that down the road without having to do a vote or whatever. They can just create those shares. This prospectus gives the ability for ATB and Canaccord to sell up to $800 million worth of those shares. So that's all it is. I have not looked at Bevcana. I really try to stay away from Canadian stocks. I do really try to stay away from them. And if I do trade Canadian stocks, I try to find Canadian stocks that are tied to the U.S. market. So SNDL is a pot play on U.S. federal legalization, the SAFE Act, and the ability to access the U.S. market unhindered. Also, I like the fact that they're debt free with $700 million to spend. That's kind of a big deal. So anyway, guys, back to the book. This is the reading list. Every book on here, this is for if you are looking to build a long term. So this is a 10-year plus portfolio. That's what this book is for. I got to tell you guys, listening to this book bored the hell out of me. It absolutely is not something that I will be doing. They talk about, for those of you that don't know who Benjamin Graham is the gentleman that was a mentor and a tutor to this guy named Warren Buffett. Warren Buffett credits him as being the second most influential man in his life other than his father. So Benjamin Graham was a big deal for Buffett, taught him most of what he knew. There's a lot in this book about bonds and diversification into treasuries, bonds, cash positions, foreign markets. This is really about building a value investment portfolio that has a 10 to 15 year scope. This is not what I do. He actually makes several points throughout the book of shitting all over what I do, that what I do is negligent, it is errant, it is immature, it is ignorant, it is like they rail on speculators, which is fine. I understand why he's doing that, so I'm okay with that. But so for me, it's not a great book for me. Reminiscences of a Stock Operator was far more valuable to me. Actually, even Trend Following, which was a TA book, was more relevant to me. I would be interested to see Benjamin Graham's thoughts on treasuries and bonds, given what happened in 2008, as well as what happened in what's happening right now with quantitative spending from the Fed. I don't know that he ever even could have imagined the Fed doing quantitative spending. Now, what they do ream into is in the 80s, the Fed did not stimulate the economy with capital, and he was very, very critical of that. So he might actually be in support of what Jay Powell's doing here. But irregardless, guys, that's the book for the week. You'll see that the list is growing nice and long now. There's lots of books on here. I've yet to come across a book that I didn't find some value in that either you guys have suggested or I find to read. Again, if you're getting started, guys, and you are a qualitative fundamental trader, speculator, Culture Code for me is #1 book to start with. If you are not, if you are a TA trader or a quantitative fundamental trader, then Reminiscences of a Stock Operator is a great place to start. If you are going to be FA instead of TA, Trading in the Zone is a great follow-up. If you're going to be a TA, the follow-up from Reminiscences would be Trend Following. But again, if you are going to be an FA trader, I do recommend you start with Culture Code first, because the most important thing for you is going to be able to understand how large groups of people react, think, and move. That will give you a lot better insight as you read Reminiscence of a Stock Operator. And when you pair Culture Code, Reminiscence of a Stock Operator, and Trading in the Zone, you really do have a good foundation for starting to build your own trading methodology. So Culture Code is going to help you understand how large groups of people think, react, and move based off of external events. Reminiscences of Stock Operator is going to help you understand how the market moves and how it's done that before. Yeah, there is a link. It's here. And then Trading in the Zone is going to help you understand how your mind works and how you're processing all the information that's going in. So those 3 books together are a really great starting point and foundation for you to be able to build your own trading methodology, which is really what I emphasize a lot of you guys go out and do. Stop trading the way other people trade. Find out how you trade. There's no one way to trade the market. In fact, everybody's got a slightly different twist, right? A lot of people would say, well, I'm an FA trader and Rita's an FA trader. Well, Rita doesn't trade the same way that I do, right? She's a wicked smart lady, but she trades very differently than I do. There's a lot of stuff that I trade that she won't even look at. It's dog shit. She doesn't want to go anywhere near it, right? So everybody's got a different style. Everybody's got a different flavor. Just be aware of that. I'm encouraging you guys to go out and find your own style. And that may be passive. It may be long-term. It may be TA. It may be through an investment firm. Whatever it is, it's got to be your own, okay? So yeah, here's the reading list, guys. I can quickly go through the books that are on here. Everything that's on here I have read. I don't put books up here that aren't for that. But this Trend Following, it's actually a great book. I enjoyed it as a fundamental, and I'm just going to say FA. As an FA trader, even though this is a TA must read, for me as an FA trader, it was really good. How's Martini? She's doing all right, man. She's doing all right. She's just trying to figure things out. Thank you so much for the follow, watching home. Let me know what it is you trade, how you found the channel. If you're a TA trader, this is an absolute must read. If you're an FA trader, it's still really valuable to read. There's a lot of stuff in here. I listened to about 7.5 hours of this book before anything came up that was like charts, math, that kind of stuff. There's a lot of really great insights into how the market reacts, how people think, and how people move. Also, really great thoughts about the bear market and how to prepare for that. So, a Trend Following is one that I do recommend. Intelligent Investor, they shit all over me for the entire book. I still recommend it because I know that there's great advice in there for people that are going to be more passive, long-term investors as opposed to speculative traders. So, that's there. University of Berkshire Hathaway. This was kind of a cool book. So, this is a book written by 2 guys that attended every single Berkshire meeting for 30 years. And then they compiled a book of all of that. Is Trend Following good? I really liked it. So the audiobooks on Audible, guys, what you need to check for when you buy an Audible book is there an accompanying PDF? And usually there is. So with Trend Following, they do have a PDF in there, and they reference those PDFs as you go through the book. So you're able to see what people would be seeing when you read the book. So most people, when you read through a book, right, you can scan for value in a book by just kind of flipping through the pages. And occasionally you'll find like a chart, a graph, this is a bad example because it's a psychology book, but if you had a financial book, there'd be pictures, right? There'd be charts and graphs and stuff. So University of Berkshire Hathaway was great for that. Trend following, Intelligent Investor. Most of these have PDFs in there, so I don't think that you need the physical copy. I actually still prefer it as an audiobook. Also, the ability to do multitasking, you have to gauge that as well. If you're not somebody that can multitask, I don't necessarily recommend that you dive into an audiobook on trend following. You will probably go cross-eyed. I listened to trend following at 2 times listening, and I had to dial it back from my usual double time to about 1.6 because it did start to get complicated. Reminiscences of Stock Operator, guys. This is a trader who was infamous, absolutely infamous back in his day. Now, his day was early 1900s into early 1900s into the Great Depression. So really, really interesting to listen through. I highly recommend it. He is a huge speculator. He doesn't trade TA. He trades based off of his gut. He's a cojones trader. I like him. I loved it. It was a great read. Trading in the Zone, guys. This is not something that's coming from a trader. He doesn't have a track record. He doesn't have that. This is about psychology and understanding your thought process, how you react to good news, bad news, and that's going to be really, really important. I think if you're a trader as a whole, but especially important if you're an FA trader. So that's that one. Adaptive Markets, guys. This is a book written by Andrew Lowe. He's a professor at MIT. This flies in the face of the efficient market hypothesis. I'm not an advocate for the efficient market hypothesis. I think that it's absolutely errant to think the market is a functional logical system that just operates. Otherwise, if it was, there would be no edge for anybody. It would be a calculated system. We could just build a computer, and that was all you'd ever need to beat the market. And that's not the case. If anything, this past year and a half is a prime example of how the efficient market is not efficient. The efficient market balks at the idea of GME doing what it did, and yet it did it. So the Tipping Point, guys. Tipping Point is a Malcolm Gladwell book. This is a business book. So as an FA trader, it's important for you to understand how businesses operate, what they think, what they do. And Tipping Point is especially important because it will help you guys understand if you're trading these smaller stocks like I am, the stocks that are sub $10. A lot of them are growth companies, and the ability to understand where a company is as it's approaching another tipping point is crucial. So SNDL, for example, I can identify that they're at a tipping point now that they have no debt and a ton of capital on hand. They are trying to move into the next tipping point and understand that, oh, they are getting ready to evolve into the next level, right? They're ready to go Super Saiyan 2 or 3. They're ready to level up and change from what they are into something new. So Tipping Point is useful for understanding that. I do recommend that read. Motley Fool Investing, guys. Motley Fool, I'm not big on their website. Their website has become trash and a real rag. So I am quite publicly an advocate of staying away from Motley Fool. But these guys, Dave and Tom Garner, have a phenomenal track record and success rate. They don't do articles on their website. They just cash in on it. And I don't fault them for that. That's great. I'm glad they're making money. But these guys here actually know what they're talking about. This is a really great way to start the market low and slow if you've never done trading before. And it's very similar to Buffett's trading of finding good companies. The next book is the book that I wrote. This has to do with business psychology, marketing, and understanding that the ethos of a business is going to be very, very relevant as we move into future years. So, yeah. That's one I wrote. One Up on Wall Street, Peter Lynch, phenomenal book. This is one where Peter Lynch shows you that all you need in order to face smart money in the market is the ability to walk into your local store. And I understand, well, nobody goes into stores anymore. Okay, so watch this. Amazon top seller. SNDL ticker is not taking the news well because people think that it's an offering. Your ability to do this, guys, list Amazon bestsellers, pick whatever division you want, and see what is the top seller in any industry. This would be like salivating, absolutely salivating. Automotive. These are the top selling things inside automotive, right? Find brands. How I made $2 million in the market. This book is a little bit older, guys, 1940s, 1950s, but this is a guy that started as a bellhop in a hotel and made 2 million in the market. Nicholas Darvis. Oh no, this is not that one. That's Unknown Market Wizards. This is the guy that beat the casinos. This is the guy. Did you guys see that movie with Kevin Spacey where he trains the MIT students to beat the casino? You guys remember that one? What was that one called? Oh, was that Tom McCritchie? Okay, I thought that was him. I'm getting a bunch of books mixed up then. No, yeah, this one, Trend Following, had that one. Anyways, this guy made 2 million bucks, and it's largely technical that he made his money on. So it's a technical read if you're a TA trader, but I think it's always good to know people that beat the market. Yeah, 21. Neurodiscipline by Peter Hollins. So this one is a psychology book. This one is another personal one. It teaches you how to program your mind to respond. Um, oh, Pavel Krejci was the bellhop from the unknown. Okay, yeah. So I think this is the one. Maybe no. 21. Kevin Spacey is the story of who? Um, Anyway, I'm getting sidetracked on that. Let's finish going through the list here. Yeah, so neurodiscipline is how to program your mind to do the right things. That one's definitely there. Jocko Willink, I know you guys are familiar with Jocko Willink. This is just one about owning your mistakes, which I think is crucial if you're going to be a trader. You can't blame the market. Okay. I want you guys to understand this. The market and you don't have a relationship. There's no personal romance between you and the spy. The spy gives no fugs about you, your thoughts, your feelings, your ideas. It doesn't care. If you lose money, it doesn't care. If you make money, it doesn't care. It's not doing you a favor when you win. It's not out to get you when you lose. Extreme ownership is going to help you guys understand that the decisions you make are yours and yours alone, which is especially important if you are somebody that's on the internet right now watching people talk about stocks and finances. Don't you dare ever show up in somebody's chat. If you send your wife, your dog, your uncle, your aunt to message me and DM me and say they lost all their money and it's your fault, my answer is going to be go read Jocko Willink's Extreme Ownership. I am not responsible for you in any way, shape, or form. You are a grown-ass adult. You are responsible for your own decisions. Stock market is not a game. It is not a casino. It is real life. It is real investing. It is real money, and you own your own decisions. That book is important. If you don't understand that concept, even if you do understand that concept, that book is a great refresher. Practicing Mind. This is actually about building discipline and understanding that one thing done once is useless. One small thing done 1,000 times is extremely practical. Everybody knows the Bruce Lee quote. Bruce Lee isn't afraid of the man that knows 1,000 kicks. He's afraid of the man that trains one kick 1,000 times, right? That's that concept, that practicing mind. Practicing your mind to constantly find and do good things is crucial. Shoe Dog by Phil Knight, guys. This is a staple in the business world. This is understanding how Nike grew from nothing into something. Phil Knight was a visionary. The other thing that I love about reading books like this, guys, is it helps you to identify great leaders that are operating small businesses. So there are plenty of CEOs that I see go onto their earnings call, and I can right away say that they are a shitty CEO. They are going to run their company into the ground. You can see it. And then there are other ones that show a lot of the similar traits to Phil Knight, where they've got innovation, they've got foresight, they've got great people skills, they're able to do great things. A lot of similarities between great CEOs out there, guys. And where their political leanings are doesn't really matter. But if you look at guys like Peter Thiel, guys like the PayPal Mafia, guys like Phil Knight, guys like Mark Cuban, guys like Bezos, guys like Bill Gates, guys like Steve Jobs. They all have some very similar traits, even though their personalities may be varied. They all have very similar traits. And reading books like Shoe Dog are going to help you understand how those people look and react and feel, so that when you're looking at a company and you're considering the management that's running that company, you'll better be able to understand whether they are complete BS scam artists or they bring some value. Tools of Titans, guys. This is one by Tim Ferriss. This one is one that I've got on my shelf always. It is a big freaking book. This is one that I recommend that you buy and do not have a audio copy of. Please get a physical copy of this book. I'll show you why. It is this big. It is a huge, massive behemoth of a book. The beauty of this book is this is like a buffet. It's a snack for your mind. Okay. In here are hundreds and hundreds of stories of successful people in all different walks of life. This is just inspiration. So this is going to help you guys understand that same thing that I was talking about with Shoe Dog. Successful people have similar traits. This is that. This is that. Okay. And if ever you're looking just for some inspiration, you don't have time to do a ton of DD on somebody, just pop this open, read a chapter. You're going to learn a lot. Some of it may not seem directly practical, like how to meditate more effectively. But the reality is, learning how people that are successful do what they do is going to be a value for you. Now, the next one is a little bit interesting given the last few that we've done. The Way of the Wolf. Jordan Belfort, you guys know him. You've seen the movie, I'm sure. Cocaine and Strippers. This was the Wolf of Wall Street. What's important about reading on this, guys, is not only do you read somebody that was hugely successful during his time, but you also read about somebody who's full of shit. So you get to learn both sides of it. Now, this man is not necessarily a great investor, but he is a great salesman. And understanding when you're being sold a bill of goods is just as valuable in the market as being a great investor. So the book is definitely worth a read to understand when you're being sold to. Complete Turtle Trader, guys. This is long-term stuff. The Complete Turtle Trader is all about a group of people that traded stocks that were on 52 weeks high and 52 week lows, and it's a whole system that was built. A lot of people were fairly successful with it. A few people were extremely successful in it and continue to be. It is a different style than what I do, but it's definitely there. It's a little bit of TA, very little FA. Really have to have diamond hands if you're going to be doing what they're doing, but that's there. Whole New Mind, guys. This is a Daniel Pink one. This is definitely an FA read. If you're a TA trader, this is going to be worth absolutely nothing to you. But this is understanding how you think. And there's a lot of people that rally out there. Oh, right brain, left brain thinking. That's so outdated. That's not really a thing anymore. You don't know what you're talking about. Okay, whatever. I know that reading that book, I came to understand a lot better how I think. And for me, I'm one of those guys that doesn't try to fix what I'm not good at. I try to double down on what I am good at. So where I fall short are things that are advanced math, science. And for those of you that have been in Martini's Discord chat or have been on the stream for more than a day, you'll know that I say it often that I am a basic bitch. I keep things basic. And I do that intentionally because when I can boil things down and make them as basic as possible, it makes it easier for me to connect pieces and understand a larger picture. So for somebody who is able to process math and numbers and do that, guys like Redemption, people like Martini, Nassim Taleb, like these minds that are capable to process numbers and do all that data, they should never try to be boiling things down to basic bitch stuff because they are capable of understanding all of those massive moving pieces and make intelligent decisions off of that. But this book, I think, is very helpful in helping you understand what is going on there. So The Power of Habit, guys, again, this one is about building habits and understanding how those habits are of value. So for me, every day from Monday to Friday is cookie cutter. I know exactly what I'm going to do and what my day looks like. Saturdays, I know what that looks like. Now, occasionally, do I break habits? Yes, I break habits, but I know that I'm going to get back to them. So this Saturday, for example, I really wanted to get the book done, so I didn't stream. I didn't do my weekly DD, but that was out of the intent of getting the book done. Start with why, guys. This is just understanding how leaders inspire people, is his title. For me, it's more so understanding what the millennial thought process is as far as running a business goes, and that they are purpose driven, but that doesn't necessarily equate to bottom line profits. So understanding when somebody is giving you a start with why excuse for their business as opposed to a solid business strategy. Daniel Pink, this is another one, guys. This is understanding what motivates you to do something else. And again, this is not just about you. When you read this book, you're going to understand how other people are motivated to do things as well. If you want to understand Wall Street bets, this book is going to be huge for you. This is an age-old must-read, guys. How to Win Friends and Influence People, Dale Carnegie. This is just a good book to read for life. It probably won't affect your trading too much. It does affect my trading methodology because I can see how people are influencers. So take Elon Musk, for example. Thanks, Chainmail. Yeah. So Dale Carnegie, guys, wicked smart man. But if you read this book, you're going to immediately understand the value of influencers with business. People like The Rock, people like Elon Musk, people like the Jenners, and the ability that they have to do things. Now, not all books in this list are positive, guys. So Way of the Wolf is to teach you what not to do as far as an investor, and understand when you're being sold to. Principles by Ray Dalio is another example of people that hype up as being a big deal. But in reality, when you read his bio and understand what he has done, he blew up 4 hedge funds to become what he's doing now. And to be honest, most of what he trades is just Berkshire. So there's that. Culture Code, already talked about that. It's a great start. These two, you should read them as a single book, Good to Great and Built to Last. This will help you understand companies that have that long-term staying potential, as well as companies that are able to take that next step. You can almost read these in a trio, Good to Great, Built to Last, and Tipping Point. All three of them kind of go well together. So these two Jim Collins books and Malcolm Gladwell. Art of War, again, this is a psychology book, understanding how you can succeed more often by eliminating falling short over and over and over again. It's a very old book, so be aware of that. Subtle Art of Not Giving an F. This is you doing what you do, irregardless of people that offer you insight or suggestion. The number of times I've had people tell me, oh, you should go back to school, you should go get accreditation, you should go get certification, you should go do all these things. You're not trading well, you should try this trading strategy, you should do that, you should do this. For me, this book is a mantra of constantly, okay, it's that ability to look at the world when it tells you you are wrong and say, okay. Starfish and the Spider is super important for understanding how business is evolving, guys. That business is no longer an epicenter. It doesn't have a pinnacle at the head and then offering instructions down like a pyramid. It's more like a web now, and it's an integrated thought process that's going on. So the issue that I have with Goggins is I'm not a fan of negative reinforcement in order to achieve something. So I know there's a lot of people who love Goggins, and if he works for you, that's fantastic. But I'm more likely to put a Tony Robbins book on here than I am to put a Goggins book on here. As close as I get to Goggins' philosophy is Jocko Willink's. That's as close as I get. Extreme ownership. I'm not about self-degradation in order to achieve something. So I understand if that works for people, and that's great. If it's working for you, fantastic. I, as somebody with PTSD, cannot have somebody berating me to do something. It just makes me angry, frustrated, and I don't get things done. So Goggins isn't something that I will ever personally suggest. I will suggest Jocko Willink. I will suggest Tony Robbins. I will not suggest Goggins. And that's not me trying to be a dick about it. That's just me being honest about who I am and how I think and process. Last one, guys, Unknown Market Wizards, but really any Market Wizards book is good. Unknown Market Wizards was particularly good because these are people that you don't hear about, guys like you and me, that have had huge success in the market, but don't necessarily run funds or are part of major funds. This is the one that has the story about the bellhop who literally decided he could figure out the stock market. Everybody told him he couldn't, and then he did, and then he made a pile of money. There are great stories in this. The audiobook was fantastic because they actually have interviews, audio snippets of this guy talking to these people. It was an absolutely fantastic book, guys. I cannot recommend it enough. This one is a phenomenal read. So there that is. The list again, guys, if you want to get your hands on it. I do add one book a week. That is one of the habits that I have of reading at least one book a week on top of all the other reading that I'm doing. So pot stocks are moving or starting to. Yeah, so let's open up the portfolio and see where we're at here. I am seeing, so I am down 4% today. I'm down 20% on the portfolio. Start of February, I was down 28%, so slowly taking it back little by little. Zomedica being down, I'm down $3,000 today. I'm okay with that. SNDL down $1,000 today. I'm okay with that. What I've resolved myself to, guys, is confidence in my ability to understand what things are going to do when things are going to do them. For those of you that haven't seen it, there's a video that Martini and I did a little while back on YouTube. Um, one that has the if you guys haven't watched this video, I recommend that you go check it out. But this is one that we did. When did this drop? May 2020. And it was completely accurate. So we actually recorded in April, and it was almost completely accurate, like 95% accurate into December and January of this year. But this is where I really am able to understand. Okay, if I play the plays that I say I'm going to play over the long term, because this is where I see the market going, that's where I get real gains. So for me, with the current portfolio that I've got outlined, guys, Zomedica is into 2 key points of FA. They have never sold a product before, and they are about to start selling their product, and their product is revolutionary, first in class. They have all kinds of patents all over it, so it's theirs for a while, and they're going to make a pile of money on it. So that's my Zomedica play. The other catalyst for that is what we're seeing in North America, not necessarily globally. Globally, there is going to be a baby boom coming out of COVID, but in North America, what we are seeing is a pet boom, and that pet boom is something that a lot of great folks in the Discord chat have brought up and we've discussed. Stocks like Zoom, stocks like Chewy and Woof. But Zomedica for me is a play on that pet boom as well. As you are getting pets, there's going to be more testing, there's going to be more medical. Zomedica gains on that. So Zomedica double dips in both of those sectors. FTOC, guys, is a SPAC, so it gets some of that SPAC hype behind it as it comes into its merger. But even more than that, FTOC is merging with Payoneer, which is a fintech company out of Southeast Asia and the Middle East predominantly. Do you think that market has already priced in Zom? How can you price in what you don't know? You cannot price in a first-in-class device, and this is something that I hear regularly, guys. It's priced in. It's already priced in. That's already there. It's not already priced in. You cannot price in a first-in-class patented device that has never hit the market before. I want you to consider for a second going back and hearing those same arguments with a lot of other products that we are now very familiar with. The iPod drops with Apple, and people are like, well, don't you think that's already priced in? Can you imagine talking to somebody from the late 90s and them telling you that, well, the iPod is already priced in or the iPhone is already priced in? That's what we're talking about here. Does Zom have a strong marketing budget for the product? They don't need the marketing budget because Tiger King got them a lot of exposure, and Zomedica with the GameStop AMC thing has had a lot of hype. The market is very, very aware of what Zomedica is. Now, in vet circles, a lot of the kings of veterinary devices are there. What is the Zom device? So the TrueForma device, guys, it's a kit. It's about this big. Okay, used to be you'd go in for all kinds of these tests. For your pets, and what you would do is you go in, the pet would get tested, and 2 to 4 business days later you would get the results back. This kit now makes it that in 20 minutes you get the test, you go sit in the lobby, or on the drive home you get a phone call, here are the results. So it's taking test results from days to minutes, which is, it's huge. It's absolutely massive. So for me, when you've got a product that is first in class, so this is what vets are going to be using from this point on. Imagine there's 2 vets in town, okay? One vet has this device, another vet is using the older device. Which one are you going to go to? right? Your dog might have cancer. Your dog might have a thyroid issue. Your dog might be dying inside. You take him to a vet, and you've got to pick between the vet that's got this device that you get results in minutes, or you go to the vet and you have to wait a week. Which one do you pick? It's kind of a rhetorical question, right? You go for the results in minutes. So that's the play with Zomedica. FTOC guys, Payoneer, you're looking at valuations on things like Square, things like Stripe, Square, Stripe, valuation, news. Stripe's value jumps to 95 billion, becomes top US startup. Let's get rid of Stripe and go to Square. Square's Q4 report shows us a brilliant company with a challenging valuation. What else do we have? PayPal. PayPal gaining as market dips. This one's saying forget, and this is interesting. So all of these companies, these PayPal companies, these Squares, these Stripes, they're really doing well. No, Virgin, they also have a medication that is in the pipeline for approval to treat dog shit, to treat dogs that have in problems with their digestive systems. So that is still a play there. This tech device isn't all they have, which makes it even that much more of a long-term case for Zomedica, where not only do they have this kit dropping, but they also have all kinds of drugs that are in the pipeline for approval into the vet sector. So they're going to become a big name in the vet sector. So yeah, PayPal, Stripe. This is saying MasterCard is the poor man's digital payment play. Okay, interesting. Now for me, Payoneer is the play. And the reason why I like Payoneer is I like where they're located. And remember the article that we just read. Why use PayPal when you're thinking MasterCard instead? Well, Payoneer is partnering with MasterCard to offer a digital purchasing card to allow small businesses to make global purchases and connect to mobile wallets, and comes amid growing competition in the virtual card market. So Payoneer is going to issue people a MasterCard that draws directly from their digital wallet, which is kind of cool. It's something that PayPal does already with Visa. This is another opportunity, but understand that people are doing that. So Payoneer for me, guys, I think is undervalued. When they come to market, I think that's going to be a big deal. When you look at where some of those other stocks are that we just talked about, we're looking at, if we go to PayPal, PayPal right now is $240 a share. If we go to Square, $224 a share. Stripe, I don't know. Anybody know what Stripe's IPO price is going to be? Do they have that yet? When do I think the name change will happen? They said first half of 2021. So we're getting towards that with June approaching. So, but irregardless, guys, I am bullish on the fintech sector. I like the moves that Payoneer is making. Right now, I'm in at a 1386 average. Given that its competitors are somewhere around the 240 to 280 range, I think that Payoneer at the very least could go to 100. So it might be a 10 bagger. Um, in my opinion. That's completely my opinion. It may not do that at all, but that's kind of where I am at with that. SNDL guys. I know a lot of people are out there and they want to tell me about they've got so many shares outstanding and this and that and the other thing. For me, guys, my play on that is pot's getting legalized. We've got a debt-free company with 700 million cash in hand to go spend and buy out companies. I think that that's going to be huge. Their announcement of pairing with SAF to create an investment fund. They put up a nice little amount of money each on that. Let's open that up so I actually have that. SNDL. Fifty-fifty joint venture, 100 million apiece. So it's a $200 million fund that they're going to invest in the industry as a whole. They're going to have all kinds of opportunity to purchase and acquire companies into federal legalization in the states. I think they're in a really great place with their branded pot, their own line that they're building. Indiva, Wana in the states is U.S. based. They have ties to edibles, smokables, hash, U.S. market, Canadian market, European market. $700 million to buy up some more. I think that it's a really solid company for me. And I'm not moving on that. That's kind of where I'm at. The only other one that I am holding, guys, with any serious position is SHG. This is a medical company that is a telemedicine play as well as a profitable acquisition company in the clinic sector. I'm playing that into Biden Care. So that's kind of what I'm looking at there. Again, these are plays into the end of the year. Some of them are having catalysts that could come sooner, but we'll wait and see what they do. As for, am I looking to make changes into the portfolio? Not at all. LC has gone up 120% in 8 days. No one knows why. Yeah, because this is so Lending Club is the idea that as people are coming out of, as people are looking to come out of um, the lockdown, a lot of these small businesses that closed down are going to be looking to open back up. What about Clove? You rate the play, so how come you're not in it? I was in Clove and I got out on a profit. I will be going back into Clove. My issue with Clove and SHG is SHG is revenue positive right now, and I can get more shares because they are $1.15 Canadian. So I got to drop $8 to $9 a share on Clove. I can get 8 shares of SHG for that, and I think SHG has more potential to go. So it's not that I don't like Clove; it's that I like SHG better. Um, that's all. Yeah. For those of you in the States, it's SHGFF, Skylight Health. Yeah, Sinnoh was a great play. I don't have the capital to get in, so I don't have the capital to get in. It is what it is, right? Um, why are name changes significant? Does it signal a positive future or something else? It signifies that the SPAC is no longer a SPAC and that they're now actually a company. They go from being a pile of money that's looking to buy a company to being a company. HOFV. You did not. I didn't look at this. This thing opened at 9:30, fell as far as $1.50, and is looking to come back up. Misses on revenue, of course. Not by that much though. Only down 10% year over year. Yeah, Zom is just floating $2 until we see it. Yeah, they're up 22% today. Option portfolio is down 7.5% today. Most of the bleeding is coming out of CCL. Saber's down as well. My GME put is up on the day. How's GME doing today? Down 3%. As we move into GME earnings, I would expect to see this hurt. I really, really would. I would expect to see this hurt into its earnings. What's their forecast? Does anybody have a forecast on their earnings? GME. Only 40% think that they are going to beat. 40% think the stock is going to go up. Yeah, 1.46 EPS, 2.2 billion is their forecast. I don't think they did 2.2 billion. There was a shortage on consoles. Most of their money comes out of Nintendo. Nintendo didn't have a new console. Most sales of games on the new platforms are digital. They are not hard copy. I don't think GME hits their 2.2 billion. I don't see it, don't think it, don't feel it. We have a GameStop in Ottawa. I swing through there whenever I get a chance to see what's going on in there. That's actually where I buy some of my Captain America swag from. Um, but the reality is, I don't see people in there buying. I just see a bunch of stuff on the walls and nobody ever buying. So, family's doing all right. Still dealing with this cancer knock. The young man who's like a nephew is out with his leukemia. Unfortunately, he also now has diabetes as a result of the cancer. So they're wrapping their head around that too. I am still planning a fundraising stream for that, guys. I'm waiting for a number. We'll know the number when he's released from the hospital to go home and start fighting this thing. So I will be doing a fundraising stream. Mrs. Millennial's coming up with some ideas for milestones. Um, but yeah, I will be doing a 24-hour stream to fundraise for the young man. I probably won't be doing stocks the whole time. I'll probably be doing some gaming mixed in with that as well. But yeah, he's in Northern Oregon right now. He's in Portland being treated. So Um, but yeah, if you're the praying kind, please be praying. If you're not the praying kind, well wishes are appreciated. But yeah, I'm gonna do my best to try to raise some funds for him. I am gonna put there is a potential sponsor for the stream incoming. All of the money from that sponsorship will be going directly towards this young man's medical bills. I'll be doing everything I can to help out the family. It's rough. As a Canadian, thinking that a family has to worry about their finances when they're fighting cancer is ridiculous to me. But that's kind of what you're stuck with. So I don't. I have no idea. I mean, he's a 16-year-old, so he probably is Fortnite crazy and whatever else. But for now, guys, like I said, I'm gonna formulate some kind of idea. He's in the hospital. He can't do much of anything right now because he's sick. He's in pain. He had a spinal tap that didn't go well. There are all kinds of weird stuff going on. So when he gets home, yeah, we'll definitely figure something out. But on that note, guys, it is 10:30. I hear my kids making a pile of noise, so I'm gonna cut it for the day. I don't think Martini's here. When I'm back tomorrow, we won't be breaking down the entire book list, so we'll be able to actually break down some tickers and do some of that stuff with you guys. But as for me, that is it for today. I hope you guys had an amazing day in the market. Stay green. I will be back tomorrow for sure. So if you're not following, make sure that you follow. If you're over on YouTube, make sure that you sub so you know when I go live. But that's it for me today. Go hang out with Stocky. Drop the beaver. You know he loves it. Um, yeah, you guys rock. Had a blast. It was a good time had by all. 3 seconds. Three, two, one.